Yesterday we studied simple average method. Okay, come to page number 92. Weighted average profit method, page number 92. Page number 92. Weighted average profit method. We have seen that in simple average method, the trend of profit is neglected. Now, what is the trend? Trend is profit is increasing or profit is decreasing. If my profit is increasing, it means आगे भी profit increase होने वाला ही है. But if the profit is increased and you go for average, so the profit gets averaged out. Okay, so we go for this weighted average method, where sometimes it can be seen that there is continuous increasing trend in profit. Under such circumstances, we would give more weightage to the profit of recent years and give comparative less weightage to the profits of previous year. Mark this line, please. Generally, the weightage of different years' profit are numbered 1, 2, 3 and 4, so on. Average workout after giving weightage to different years' profit is called weighted average profit. Underline weighted average profit. If the computation of goodwill is made on basis of weighted average profit, then it is called weighted average profit of average method of goodwill. If specific instruction is given that compute as per weighted average method or every year profit increasing or decreasing trend, then compute goodwill as per weighted average method. Please mark this. Now, you can see on page number 93, step number 1. Years are given 12, 13, 13, 14, 14, 15 and 15, 16. सबसे ज़्यादा weight किसको मिलेगा? Which year will get the maximum weight? 15 and 16. Okay, so you can see 12 and 13 gets the least weight. So 1, 2, 3 and 4. You remember the formula of weighted mean? Yes. Sigma wi xi upon sigma wi. Similar, sigma iw upon sigma w. किया तो अभी हमने index number में. Similarly, what we do is we have product which is weight into profit. We find total weighted profit upon total weight. What is goodwill? Goodwill is equal to weighted average profit into number of years of purchase. Okay. Write in your notebook, please. Second method. Weighted average method. We find out first weighted average profit is equal to total weighted profit upon total weight. Second, goodwill is equal to weighted average profit into number of years of purchase. Important note, give maximum weight to recent years. This is important. Proceed. Okay. Now, page number 105. Question number 6. Page number 105. Question number 7. From the following information of Babulal and Kantilal's firm, determine the value of goodwill on the basis of 3 years purchase of last 5 years weighted average profit. Now over here, year is given. Let's first write year 2012-13. Profit 40,000, 60,000, 75,000, 90,000, 1,20,000. Now, year is given, profit is given, we assign weights. Now, highest weight किसको दोगे तुम? 16, 17. So least will be 12 and 13. So 1, 2, 3, 4 and 5. We find product 40,000 into 1, 40,000, 1,20,000, 2,25,000, 3,60,000 and 6 lakhs. 13,45,000. Now, first we find out weighted average profit. So, weighted average profit is equal to total weighted profit upon total weight is equal to 13,45,000. What's the total weight? How much? 80, 660, 6.686. Okay, so 67. Now, therefore, goodwill is equal to weighted average profit into number of years of purchase equal to two lakh. Wait. 89,667 into 3. 2 lakh 100. 2,69,001. So which is 2,69,000. The 1 is because of rounding off over here. Third one is super profit method. Now, what is the meaning of the word super? Super से भी ऊपर. Super यानी क्या? Something which is more than normal. Superman. तो Superman में इतने powers थे which a normal man does not have. So super is something more than normal. Okay. Now, in this method of goodwill, what we have to understand is, say for example, I have invested in business rupees 10 lakhs. The type of business this is, there is a normal rate of return. Say for example, if I say कि hotel industry, So normal rate of return or normal profit on investment is 40%. Okay, so on different type of industries have a normal profitability. Okay, if it's a automobile sector, the profitability is less. So average profitability or normal profit will be very low. But a service sector, IT company, restaurants, hospitals, there, educational institutions, there the profitability will be higher because it is service oriented. यहाँ पे कोई भी inventory goods कुछ भी चाहिए नहीं. So normal rate of return, say for example of the business where I have invested money, it's say for example 10%. Okay. So what should be my normal profit? My normal profit should be how much every year? After investing 10 lakh, how much money should I get? 10% of this. So I should get 1 lakh rupees as my profit. But if I see my past years, my average profit is equal to rupees 1,50,000. Normally, how much should I get? 1 lakh. But how much I am getting? 1,50,000. So can I say super profit is equal to average profit minus normal profit? Can I say this? Which is 50,000. Understood this? Okay. This additional profit is because of my goodwill. अगर मेरा अच्छा इमेज है तो I get extra customers, I can charge more premium, and that is why I am having this extra super profit. You understood what is super profit? Okay, and that is why when we want to find goodwill, we say goodwill is equal to super profit into number of years. समझ में आ गया सबको ये concept? Do you agree with this concept? All of you understood this? Okay, super profit यानी क्या? कि something more than normal. तो normal क्या है? कितना invest किया, उसके ऊपर कितना return मिल रहा है? तो normal या expected profit should be 1 lakh. How much I am earning? 1,50,000. This average profit may be simple average or it may be weighted average. All the information will be given in the sum. We find out super profit, apply the formula of goodwill. ये extra profit और कितने साल तक I can carry forward. That will be my value of goodwill. You got a fair idea about how this method works? Okay. Capitalization method is also connected with this, but we'll go one by one. Now, come to the textbook first. You can take a pencil with you. Page number 94. Super profit method. In this method, page number 94, super profit method. Please ध्यान देना book में. In this method, capital employed by the business. Now, what is this capital employed by the business? Flip the page. You will see over there capital employed यानी how much money we have invested. That is asset minus external liability. Can I say capital? Okay. Now, capital employed by the business, expected rate of return. Now, what is expected rate of return? Can I say normal rate of return is expected rate of return? Understood this? Okay. So, expected rate of return में you can write expected rate of return is normal rate of return. Why I'm using the word normal is because we have the method name super. तो तुम्हें पता चलेगा कि super क्या है और normal क्या है. Okay? Then average profit are used for super profit. The excess of average profit over expected profit is called super profit. Or we can write over here the excess of average profit over the normal profit. You understood this? In exam you will write the word expected, but what is expected? It is your normal profit. जो actually मिला, okay, वो तुम्हारा actual average profit is this much amount you have earned, this much you should have earned. Now what is normal will always be lower. What is normal will always be over because that is a goodwill. What happens if this profit, average profit is less than normal? Then there is no goodwill. In fact, your image in the market is down or it's extremely competitive. तो तुम्हारा अभी तक image बना नहीं. समझ में आया ना? So then this question of goodwill does not arise. Got it? Then what you are earning is even below normal. So why should someone pay you for goodwill? If you are selling your business and you are not earning as per the market and the industry, then why should anyone pay you extra for goodwill? सामने वाला बोलेगा कि भाई तुम्हारा तो नॉर्मल 10% भी रिटर्न आ नहीं रहा है, तो तुम किस चीज का गुडविल मांग रहे हो? पर सामने वाला ऐसा बोलता है कि मेरे पास सुपर प्रॉफिट है, नॉर्मली इंडस्ट्री में 10% कमाते हैं पर मैं तो 15% कमाता हूँ, तो that 5% extra is my super profit. Understood this? You practically are able to understood this. Okay, this is how things work. Now, so when a business earns excess profit over average profit, the amount of excess profit is called super profit. On the basis of this profit, valuation of goodwill is made. Now, first step, capital employed. Can we find capital employed? Asset minus liability. Expected rate of return is your normal rate of return. Expected profit is your normal profit, which is what? Capital employed. Say for example over here 10 lakh into 10%, which comes to 1 lakh. Over here capital employed into expected rate of return upon 100. Average profit. Average profit after adjustment means we have to find what is the average profit, either using simple average method, which is SAM, or weighted average method, which is WAN. Then super profit is equal to average profit minus expected or normal profit, and then goodwill is equal to super profit into number of years. Capital employed, that is a note. Capital employed is also known as net. Understood this, all of you? The method पता चला क्या है? Okay, write this example so that this concept becomes clear in your mind, and then we do a sum. Pushpa, Pratibha and Bhavna are partners of a partnership firm. They decided to change their profit loss sharing proportion from 3:2:1 to 1:1:1. Therefore, they decided to make the valuation of goodwill on the basis of partnership firm's profit and other information. Determine the value of goodwill on the basis of 3 years purchase of super profit. Now, asset is given, liability is given, expected rate of return is given, actual profit is also given. Let's start with the first step, capital employed. Capital employed is equal to assets minus liabilities, which is equal to 6 lakh minus 2,50,000 is equal to rupees 3,50,000. Got it? Now, second is expected. What is expected? Expected is normal. Okay? rate of return is equal to 10%. So third, expected profit is equal to capital employed into expected rate of return upon 100 is equal to 3,50,000 into 10% is equal to 35. Fourth one, average profit is equal to, now over here, is there any trend? Is there any trend? 80, 70 and 90, there is no trend. So we find out average profit normally. 80,000 plus 70,000 plus 90,000 upon 3, 2,40,000 upon 3 is equal to 80,000. Fifth, super profit is equal to average profit minus expected profit is equal to 80,000 minus 35,000, which is equal to rupees 45. Can I say super profit 45,000 because of our goodwill? Therefore, goodwill is equal to super profit into number of years of purchase is equal to 45,000 into 3, 1,35,000. Now, capital of Meena and Manju's firm is 4 lakh. So, first step, capital employed is already given to us, rupees 4 lakh. Second, expected rate of return is 10%. So, expected rate of return is equal to 10%. Third, now we have expected rate of return, we have capital employed. So what is our expected profit? Expected profit is equal to capital employed into expected rate of return upon 100. You are supposed to write all these things. One, two, and 3. There is a declining trend. Can you see this? Okay, so that will affect the goodwill. Product 1,20,000, 2,20,000, and 3 lakh, 6,40,000, and total over here is 6. Therefore, weighted average profit is equal to total weighted profit upon total weight is equal to 6,40,000 upon 6. How much? 1,06,667. Now, super profit is equal to weighted profit minus expected profit is equal to 1,06,667 minus 40,000 is equal to rupees 66,667. Therefore, goodwill is equal to super profit into what is number of years? 2 times. So into number of years of purchase, which is equal to 66667 into 2 is equal to ₹1,33,333 approx. Because it will be again 0.33.